Transaction analysis. What you see in front of us here is something similar to the exhibit in our text on page 19. It is a transactions we are going to record using the accounting equation. Hopefully you see here we have the accounting equation, assets equals liabilities plus equity. Where did these names come from? Please turn to page 45 in your textbook. This information that I've gathered here refers to the serial problem on that page. We are going to look through this serial problem together and record the transactions on this accounting equation here. The serial problem states, on October 1, 2013, Adria Lopez launched a computer services company, Success Systems, that is organized as a proprietorship and provides consulting services, computer system installations, and custom program development. Lopez adopts a calendar year for reporting purposes and expects to prepare the company's first set of financial statements on December 31st. Create a table like the one in Exhibit 1.9, that's the one I referred to earlier, using the following headings for columns. We have cash, accounts receivable, computer supplies, computer system, office equipment, accounts payable, A. Lopez capital, A. Lopez withdrawals, revenues, and expenses. Then use additions and subtractions within the table created to show the dollar effects for each of the following October transactions on the individual items of the accounting equation. I am not going to ask or show you the new balances after each transaction. I would prefer to wait to the end to give you the totals for each item. So let's begin. October 1. It says A. Lopez invested $55,000 cash, $20,000 computer equipment, and $8,000 of office equipment in the company. So we are looking at this information from the company's point of view. What did the company get? The company received from A. Lopez cash. It says so right off the top. Now this cash is going to be increasing the cash for the company. So in order to document that information on this accounting equation, we will write plus 55,000. Is that all that the company got from A. Lopez? No. If you continue to read on, it says they received $20,000 of computer systems. So we go over here, the computer systems. It is a increase to computer systems in the amount of $20,000. Also, the company received $8,000 of office equipment. So far, so good. Now, the company received the $55,000 cash, the $20,000 computer system, and an $8,000 office equipment. But why? Who gave that to this business? Why did the business get it? The business got it because A. Lopez gave it. How much did A. Lopez give to the business? Well, A. Lopez gave $55,000 cash, $20,000 office or computer equipment, and $8,000 of office equipment. And if we add all of that together, what's the total? $83,000 worth of stuff were received by the company from A. Lopez. Sorry, the pluses aren't working on Excel. I will put in parentheses any subtractions. So we'll leave the pluses to these accounts as just positive numbers, and the minuses will be in parentheses as negative numbers. Okay, hopefully you understand what's going on so far. So let's look at the next transaction date, October 3rd. The company purchased $1,420 of computer supplies on credit from Harris Office Products. What did the company get physically? The company physically received $1,420 of computer supplies. So we go to find computer supplies, and you'll see it's under assets. And they received, we will add $1,420 under supplies because that was received by the company. How did the company pay for this? Well, in the problem it states that they purchased them on credit. That means charging it. Do we see anywhere where we have something we owe? Yes, it's under liabilities, specifically accounts payable. Now, what you need to understand is at all times we are keeping the accounting equation in balance. We have assets on this side of the equal sign and liabilities and equity on this side. And at all times we want to make sure that the accounting equation is always in balance. So if we add the 1420 to assets, we also are increasing our liabilities because before this purchase we didn't owe any money. Now we owe $1,420 in for the supplies that were purchased. Now, if I add to this side and I add to this side, is the accounting equation still in balance? Yes. Next date, the 6th. The company billed Easy Leasing $4,800 for services performed in installing a new web server. Uh-oh, what did we do? We did work. Did we get the money for the work that we did? No. We're waiting to receive the money. So that is what we refer to as an accounts receivable. We are waiting to receive this money from Easy Leasing. So the $4,800 that we did in work and are waiting to receive is what we refer to as an accounts receivable. So we increase our receivables by $4,800. And why are we due this money? Why are we waiting to receive this money? It's because our revenues went up. We did the work, we earned the money, we get to increase the revenues by $4,800. Next, let's see, the 8th. The company paid $1,420 cash for computer supplies purchased from Harris Office Products on October 3rd. So what's happening here is we are paying off what we owe. Where on the accounting equation do we see what we owe? Liabilities are what we owe. We said we owed $1,420, and on this day we are paying it. So when we pay what we owe, is it or should it be removed? Yes. So we need to subtract out $1,420. And how are we paying that? How do you pay your bills? You pay it with cash. And cash can be referred to as a check as well. So is the cash going up or down in this transaction? It is actually going down because we are using it to pay the bill. So minus $1,420. Next date says the company hired Lynn Addy as a part-time assistant for $125 per day as needed. Okay, we hired an individual. Is there any transaction to be recorded on the accounting equation? The answer should be no. No money has exchanged hands. The company hasn't paid anything. The company hasn't received anything. We just agreed to hire this person and pay them $125 per day when she works. So she hasn't worked yet, so there's no transaction to record for this date. The next date here is the 12th. The company billed Easy Leasing another $1,400 for services performed. Okay, did more work, didn't get the cash. waiting to receive the money. So we come over to accounts receivable and we increase our receivables on this day for $1,400. And why did we increase our receivables? Because we did more work but didn't get paid. So we increase our revenues by the same amount, $1,400. Now, can you see that I am always making at least 2 entries into 2 different items on this chart? Double entry accounting. At least 2 items are affected. And we're also maintaining that the equation is always in balance after each transaction. I think I put it too low, so I put it too low, so I'm gonna add it here. Oops. And we'll delete this one. Okay, next date says the company received $4,800 cash from Easy Leasing as partial payment towards its account. Oh goodness, what does that mean? That means we got money, right? We received cash. Did the cash go up or down in this transaction? Cash is going up, so we will add to our cash the $4,800 that we received from this company. Now, why did we get the money? Well, we got this money because we were owed the money. We were waiting to receive this money. So if you notice under accounts receivable here, yes, that we billed the client and they are finally paying us this $4,800 that is owed to us. So in this instance, when we receive this $4,800, have we received this $4,800? Yes. So in this, under accounts receivable, we must take out the $4,800 because Easy Leasing has given us that money. Next date is the company paid $805 cash to repair computer equipment damaged when it was moving. Oh goodness, that means that we spent some money. Yes, we paid cash. That means cash went down. Cash is going out, so we will subtract $805 in cash. But what is the corresponding, where's the next entry? We subtracted from cash, but what else do we need to subtract from? What's happening? Well, our expenses are going up, but because of how the effect is on the accounting equation, we will subtract out $805. This subtraction is kind of misleading. We are not subtracting the $805 from expenses. We put it as a negative $805 because its overall effect on our equity. If you recall, going through the accounting equation, there were 4 items that affect the overall equity. And expenses, no matter what expense it is, it decreases the overall equity. That's why we have a minus here. Okay, next date, the 20th. The company paid $1,940 cash for advertisements published in the local paper. What happened? The company paid more money. Specifically, we paid out $1,940. Cash is going down, but why did cash go down? Because we paid for advertising. What is advertising? Where does it fit in these records? It is another expense. So what we will do here is also subtract out the $1,940 under expenses. Next date, the 22nd. The company received $1,400 from cash from Easy Leasing towards its account. We got more money from Easy Leasing that has been owed to us, that we are waiting to receive. $1,400. If you notice under accounts receivable, we have it right here, this $1,400, and on this day we are getting it. So we have received it as of this day, so we need to subtract the $1,400 out of that account and add it to the cash. We're adding it to cash because we physically received $1,400 from Easy Leasing. The 28th. The company billed IFM Company 5208 for services performed. We did work, we didn't get the money. What happened? We're waiting to receive the money, so we need to add to accounts receivable 5,208. And why did we get this? Why are we waiting to receive the money? Because we performed our service, meaning we did earn revenue. So we need to add under revenue 5,208. Okay, the 31st. The company paid $875 cash for Lynn Addy's wages for 7 days of work this month. Hopefully you have realized that we can calculate this, but the book did give us the grand total. How we calculate it is, as on October 10th, it says that we hired the person for $125 per day, and then on the 31st it says that Lynn Addy worked for 7 days, so if we take 7 times the 125, that is how we get the $875. So we're paying wages. How do we pay it? We pay it with cash. So cash is going down by $875. And what is this cash payment for? It is a payment for wages. Wages to the business are an expense. So we are subtracting out $875 under expenses. Last date, it says A. Lopez withdrew $3,600 cash from the company for personal use. What's happening from the company's point of view is cash is going down, minus $3,600. And why did cash go down? Because A. Lopez took money out of the business. What do you think represents that? What do you think represents that information on the accounting equation here? A. Lopez withdrawals. So under A. Lopez withdrawals, we will put minus 3,600. Again, the overall effect of withdrawals on equity are that they decrease, hence the negative number here. The last thing we need to do is total up all of these different items under our accounting equation. The total in our cash account. We will take 55,000, subtract out 1,420, add 4,800, subtract out 805, subtract out 1940, add so on and so forth. So we would do the same thing with all of these accounts. So this accounts receivable total is 5,208. The next account has a total of 1,420. The computer system has an account balance of $20,000. The next one is $8,000. Let's see. Accounts payable has a 0 balance. Capital total is $83,000. The withdrawals are $3,600. Revenues are, let's see, 4, 5, 6, 11, 408, and then the total of 9, 7, I don't know. But you get the gist of all of this. You're working with the accounting equation and adding and subtracting under each of these particular items based on what's transpired in the transaction. What we have done is analyzed our transactions and recorded them into the accounting equation.